Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 3rd of December. And starting off with what was possibly one of the easiest trades of the year, given the way that the cash, we knew the cash at Braveheart was around the 45 pence a share level after the money that it's taken in with its recent investments. And yesterday it was trading around 33 pence, which was a significant discount to the cash position. I saw some one or two traders on Twitter saying that they were entering the stock on that basis. Obviously today we've had a decent push to the upside, and what the current technical situation is that while we're above resistance on the way down at 48 pence, the upside here could be towards 70 pence plus, or the top of that channel from September. So that's pointing up towards 78 pence, hopefully over the next 4 to 6 weeks, but only while we're above 48 pence. On to a stock which has been bubbling around in recent days, Besant Resources, still hugging the floor of this rising trend channel in the 50-day moving average at 0.24 pence. While we're above the latest swing low at 0.21, looking for a further upside. The trigger on a fresh move to the upside would be an end-of-day close through 0.28 pence, and hopefully then the shares would once again surge towards 0.4 pence plus as they did in October and November. Good to see Audio Boom making a move at the moment. Stock's had a rather difficult history, but bounced off the 200-day moving average earlier this week and remained above the 50-day line for most of November. That's at 185. Current view is that while we're above the 20-day moving average at 196 on an end-of-day close basis, we could hit that resistance line projection from March, currently promising a £2.80 plus target, hopefully by the end of next month. Onto a stock which has been on the back foot, obviously because of the fundamental situation regarding the lockdown, etc. But after an extended falling wedge on the daily chart, we finally broke out yesterday after the break of that resistance line there from October. That line running around the 0.9 pence level. And while we're above that on an end-of-day close basis, looking towards, I suppose, resistance on the way down, which was towards the 1.25 pence zone, 1.3 pence, in fact, just above the current level of the 50-day moving average, but above 0.9, looking like a recovery here. Added momentum probably provided by the way that this was a falling wedge, which had a gap within it, so it's exhaustion gap to the downside. And the turnaround, therefore, all the more sprightly with that. Breaking 1.3, hopefully we then target up to the 200-day line at 1.8, but obviously this stage quite a long way away for Big Dish. On to Eve Sleep, which is a stock which we covered recently, I suppose, on the initial rally that there was in the late summer. Since then we've been in consolidation mode and really looking now to see whether we can keep going with the momentum of the latest breakout through the 50-day moving average at 4.28 pence and through this October triangle as well. Triangle around the 4.5 pence area with its resistance line. So really, while we're above that and with an end of day or end of week close above that, we should hopefully then be able to retest the best levels of the year towards 7 pence. Stop loss back below the 50-day moving average. Onto a stock which has sorted itself out in terms of its recent placing, etc. Consolidation mode, so I suppose between 1.1 and 1.2 pence. Looks like we've got a breakout here for Gunsynd. End of day close through 1.2 pence should give us the long promised and long awaited target towards now towards 2 pence at the top of the rising trend channel on the daily chart from January. This stage only, I suppose, well below a penny and the floor of that channel, really delaying the upside scenario for Gunsynd. Iconic Labs continues to be one of the most active situations this week in terms of share volume, and slowly building a base here with the support line there from September around the 0.11 level. Probably be good to see a weekly close above the that resistance line there from September and the 50-day moving average at 0.14. If you can get that, then Iconic could then at least have a go at retesting the 0.02 to 0.025 area, which is where the 200-day moving average currently is. Onto Ironveld, and here we've got stock with not one but two gaps to the downside. Hopefully the last one is an exhaustion gap if you're a fan of this particular situation. Probably would need to see a clearance of this resistance line there from October within the falling trend channel, so let's say 0.5 pence plus on an end of day close basis to give the shares a chance of revisiting the 0.7 pence zone, which was resistance before the last gap to the downside. I suppose the stop loss here back below the initial December support at 0.4 pence, but a very strange chart indeed. Good developments at N4 Pharma, with the chart looking or doing what it's sort of promising to be to do for quite a while. So we broke that line of resistance from the beginning of September, that and also the 50-day moving average at 6.59 pence. While we're above that, looking for the shares to retest resistance on the way down around 12 pence. Ideally, we get a weekly close back above November resistance at 8.3 pence. That would be useful in order to cement the idea that 12 pence will be on its way, hopefully over the next 4 to 6 weeks. On to stock which is not quite in the same sort of sparky mode as N4 Pharma, but having a go anyway. We've broken that line of resistance on the NTOG or Nostraterra daily chart there, and the 50-day moving average at 0.38. While we're above that, looking for a retest of last month's resistance around 0.53, hopefully over the course of December. Bigger stock to look out just for a change, because it is quite active, still remains quite active. Rolls-Royce, finally, after a bit of jiggery-pokery either side of the 200-day moving average, we started off December with support on that particular line at now at 101 pence, and actually gapped up today. So an end-of-day close through £1.22 should at least give the shares a retest of the best levels of last month at £1.37. Overall, looking for £2 here, which is a resistance line projection from April, but initial target obviously 137, and then towards £1.50, which is a July resistance line projection. At this stage, only really an end-of-day close back below yesterday's low at 109, really delaying the upside scenario, and hopefully we wouldn't even see an end-of-day close back below yesterday's high at £1.18. Just a couple to go now. Tech Capital, resisted looking at it because it tends to fall back every time you do look at it on a bullish perspective. But here we've broken above the November peak at 12.5 pence, and while we're above that, and now that we're breaking September resistance, we should, or could, let's say, retest the best levels of the year seen in April at 24 pence as soon as the end of next month, and hopefully even by the end of this month. But above 12.5 pence, looking for 20 pence plus on Tech Capital. So finally taking off there. Finishing off with Zenega. Here we've got a nice little breakout here above the 200-day moving average. That's a line of resistance, I suppose, from July, which has been broken at 6.15 pence. And while we're above that, looking for a June resistance line projection target as high as 11 pence, hopefully over the next couple of months. So that looks like a reasonably good risk-reward trade after months of consolidation for the shares since June. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.